Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Tuesday, April 17th, 2012, and we had a major move in the markets today which stopped us out of several of our short positions. However, I still would not be a buyer of these markets, and ultimately, for the same reasons I've talked about in the past, I want to show you a couple things today that are a little bit different. When we look at these bottoms we talked about back here, you get no hammer candlestick formation. Here's a hammer. When you get a bottom like that, you're in an uptrend. When you get a bottom like that, you can start looking for buy opportunities, a higher series of highs the next day, typically a higher series of lows as well. It's a great buying opportunity. Instead of stop right here, you buy. That makes perfect sense. You're in an uptrend, so forth and so on. Over here, you get a pullback, and then you get something different. You don't get a hammer candlestick, but she does reverse back to the upside. This tells you to be concerned that these are typically telling you this is not the real bottom. Eventually, you find a peak, and you start to sell off and you break down, which is basically showing that this bottom, in fact, was not a true bottom, and that's why you went lower. Now we've bounced around, turned around, and started making a move higher again. However, same condition, no hammer candlestick telling us this is not really the bottom. Even though the price activity of the market closed at Dow Jones up 195 points today, look at the volume. The volume behind the move here is actually less than it was the previous day and less than it was the days before that. This is not a really strong move. Some people are going to be bullish because the market goes up, bearish because the market goes down. I'm not that simple. I'm a little bit more complex than that. And ultimately, even though I've been stopped at a shorts, I just can't get bullish in this market. She's making lower lows, and now she's testing a previous high. We've talked about this before. Once you go up there, you test it, you fail at that level, you will have confirmed a downtrend. At that point, I want to short again. So I'm looking for another short opportunity and not a buy opportunity. Again, questioning this rally we have in the market today, I want you to always do this for yourself. Whenever you're looking at the markets, find some confirmation of it, okay? Not just another market that's going up, but find the inverse markets, see what they're telling you. When we look at the VIX, we look at the dollar, we're seeing a different story, so let's look at those. Looking at the UUP, or the Power Shares US Dollar Index Bullish Fund, we've been talking about this for a while. It's very important to an overall market situation where we may be peaking. What you have here is an inverse head and shoulders formation, or at least a setup of one. You've got this first shoulder, the head formation, and the second shoulder is just an upside down head and shoulders formation. Then we have this move here, which is very important. It's notice the high point here, and we break out above that, showing there's potential here for reversal. Then we want to watch this pullback. Does this pullback give us a series of higher lows compared to this low? And that's exactly what we're seeing, both here and now here. So this is starting to form into an uptrend. If the dollar is forming to an uptrend, it happens for a particular reason. People sell stocks. People with money are selling stocks, and they are, in effect, buying the US dollar. That's giving a floor to the dollar, and that's driving it higher. So even though you're seeing the markets go higher, you're really looking at a peak going on in the market. And you know that for other reasons as well. You can look at the longer term picture of the NASDAQ. You can see the overbought RSI. We've talked about that several times in the past. And then you can look at today's activity. Does this confirm today's big move in the markets? No, it does not. It shows, in fact, it's really not gone anywhere. It's just showing some support. You could say that we have been actually kicking at this point. High, low, flat. All we're doing is moving sideways right here. That is not showing me a big breakout to the market. In fact, I'm thinking you're seeing in the market is a fake move to the upside that you can look for another short opportunity. That's what I would do. The VIX, or the Volatility Index, which runs the inverse of the S&P 500 and shows you basically what options traders are doing out there, whether they're bullish or bearish in the markets. You can note this chart and pretty easily and get some idea of what's going on in the markets. Whenever this chart is going up, the overall markets are going down, and vice versa. When the overall markets are going higher, then this one will be going down. However, again, I want you to notice a couple different things. Number one, the put options, or people expecting to sell this market, has increased. Obviously, they're believing the market is becoming overextended. And then on today's big move that you had in the markets, what do you get? You get a sell-off intraday, and then people start buying a bunch of puts, and it drives it higher. So you form a hammer candlestick formation. Another one over here. Again, with the same kicking activity, up, down, up, down, up and down and back up. You're moving sideways. You're forming a support, a base. Previous base was here. You broke through it. Now you bounced up through it again, and you're forming it again. This market is not actually confirming a market rally. This is actually confirming more that you should be very cautious in this market, and that's what I would recommend. I would not be long this market any way, shape, or form. And again, I am looking for short opportunities in this market. One last item to note here regarding the VIX. You can look at the 50-day moving average, this red line right here. You'll notice this red line is acting as resistance. Here, here, here. Up here, it closes above it, quickly back below it, comes up to it again, resistance, sells off, resistance, sells off, closes above it, consistently, pulls back to it. We're finding support at the 50-day moving average at this time. That means that your markets have changed from what was a major market run to the upside, a bullish market, which was showing a bearish market on the VIX. Now you've changed from a bullish market to a bearish market because the VIX is showing a bullish condition. Now you know everything that I know. If you've not been to our free website at perfectstockalert.com, it's right there. It's 100% free. All we ask in return, please refer a friend. Also, you can share our videos online. We appreciate that. It helps support our free website, and that helps us better serve you. Okay? God bless. Take care, and I will see you in tomorrow's video. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.